Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, good afternoon, good evening. Hey guys, how you doing?
Morning, everyone.
Let's get some enthusiasm in the chat. Where are you guys from? Let me know what pairs you're looking at, where you're from. Let's get it going. We have a lot to go over, so make sure you are ready to take some, ready to mark all these great setups on your charts. We're going to take advantage of it. Awesome. All the way from Iran. Let's go.
Tehran. Portugal. South Africa. Nice, nice.
We'll get started here in just a few minutes. We're going to wait for people to trickle in. It's been a slow week, relatively. The majors haven't really moved that much. We're mainly going to be talking about some exotics and crosses today. Not too much going on with the majors. I will cover like one or two of them.
It's typical for August. Low volatility month. A lot of choppy price action. So no need to force anything.
Mm-hmm.
I mean, I trade mainly the majors, so yeah. I've been pretty much on my hands, right? I don't really like trading exotics personally. That's okay. We'll get the volatility back. Some more South Africa, Nigeria.
Awesome, guys. We'll give it a few more minutes. We'll get started.
India, nice. And we're all over today.
All over the place. I love it.
That's recall.
Mm-hmm.
Nigeria, yeah. Chinadu. I've got a really good friend from high school named Chinadu from Nigeria. Love the name.
Awesome. Yeah, Raleigh. Awesome. I love to see that. Sam, how are you doing?
Sam was on last week.
It's right. I remember you. You should grab a beer or something. She's from Raleigh. I'd be more than happy to hang out with some of you guys if you're ever in the States. We head to Atlanta sometimes. We go to Bama. We go to New York. I'm all over the place. So if you guys are in the States, let me know where you are. Link up, maybe do like a session together. Sort of like chart markup session. That'd be kind of dope.
Yeah. Greece. Clayton, NC. Oh my goodness. I've been living right near Clayton, right outside of Raleigh for the past 2 years. I'm sure he's familiar with the Mezcalito. That was my favorite spot.
Budapest, New York, Kenya, nice. South Africa. I'm planning to take a trip to South Africa soon. Let me know any hot spots I should go visit. I'm trying to go in the summertime, so probably that's what, winter time for us, December, January. Awesome. All right, guys, we'll get started. We have about 50 people joining. I'm sure there are going to be more trickling in here soon.
I'll monitor the chats.
Yeah, here we go. If you have any questions, Aiden will be monitoring the chats for now, but I won't be able to see the chat, so I'll take some questions after we finish our chart markup session. So I'm going to share my screen here. All right, perfect. Just say yes in the chat really quick so I can make sure everyone can hear and see me. And then we'll go ahead and get started. There we go. All right, cool. Just wanted to make sure. All right, awesome. Let's do it. So we have all these pairs highlighted in red. I'm going to cover relatively quickly. I'm not going to go too in depth on these, just because not a lot of them are, they're not pertinent per se. We have some setting up, but I'm going to go over the general directional bias and maybe give some areas of interest you can look out for. So with AUD Swiss franc, we've been looking at this pair for quite some time. All these boxes here are areas of supply in which we've been taking trades from. So overall, we're bearish. We've been looking for shorts, and we can really confirmed it with this closure below this prior low. So we had that overall pullback, sweep of liquidity, and now we're starting to continue. So on the 1 hour time frame, you can see in here, we've been talking about this for weeks now, guys. We swept liquidity, came up into a higher time frame level of supply. We distributed lower time frame, and then we broke that structure. So we pulled back up into this level of supply. We actually came up into a lower time frame level of supply here on the 15-minute. Just kind of chopped around for a little bit, formed this area of supply here, and fell. All right. So once we fell and broke that structure, now I knew, okay, well, we're good here. Stops are above the high. Now, on the lower time frame, we could potentially take another trade. So we formed a high, formed a low, ran that descending liquidity into our level, pulled back, came a little bit higher, maintained our structure though, pulled back again, failed to make that higher high and made the lower low. So now this flips to supply. This was once demand in here because we were just reacting off of the higher lows. But now we flip to supply because the demand is now invalidated because we failed to make that higher high in sequence because we rolled over. So now we made that lower low. We've just been chopping, right? So many people would probably go based off of these swing points, pull a fib, 61, 71, 78, take a short, which, would work out in this scenario, but probably not this scenario, right? Because we're forming liquidity. So yeah, you can take it off of these lower time frame swing points. You could have easily, taken it off of here and it could have went short, right? But overall, it's creating liquidity for it to take. Right? Why do the banks create liquidity? Well, since we know they are the ones moving the market and we're not, they have to place their large contracts, their large volume sizes. Could be hundreds of thousands of standard lots, potentially a million. I've seen a few million standard lots at one time. But in order to be able to be filled at this region of price, if we're going to go short from this level, which through confluence, we would assume that would be the highest probability area of interest, and we ended up going short. But anyways, they have to be placing large contracts. If there's not enough liquidity, they're not going to be able to do that. So they have to free up liquidity, meaning create liquidity, right? Entice some sellers, take that liquidity, free it up. So now there's a lot of liquidity for them to place their large contracts. They push up once, didn't get their entire fill, had to push up again and get the rest of their contracts in and then fall. So that's why you see multiple touches sometimes within areas of interest. But anyways, we shorted it from this region. We already had a short from that region and we fell, making that lower low counter trend. We do the same thing here, kind of create more liquidity, create a little bit of descending liquidity on a lower time frame, pushed up into that level, got another short. This is our last buying volume into this supply before the fall. We sold it at that region of price. I sold it at 6690. It's that psych level, round figure. And then we broke structure counter trend here, closing below this last buy to sell. So on the 1 hour time frame, you'll notice, and it's not that pretty, but you'll see this clear institutionally sponsored buying volume into our level of interest. Reacted very strongly from it. You can see there's no wicks on these candles because why would there be wicks? If we're gonna get in and then we're gonna get out. That's the whole point of sweeping liquidity. the banks are involved in this trade or in this area of price. They're going to buy it very quickly, stop, close it, push right back down. They got to get in, get out. Okay, so now they're in drawdown on their buys here when we're down here. So we have to come up and mitigate. We ended up chopping for a while. So it was a little worrisome to me, but I'm like, we got to be patient with it. When people see this choppy price action, a lot of people are like, oh, I'm just going to get out because it's not making, our move, which I wouldn't say is the worst thing in the world, but you entered here for a reason. You should probably just trust the analysis and let it do its thing. A hit stop. We all have trading plans, as you probably should. And we know that losses are a part of the game. So we ended up creating more liquidity. We ran it one more time and then we fell. So we finally made that lower low. I was hoping for an overall pullback into our most recent level of supply, kind of filling up in balance, because we can see that last buy to sell that created that lower low, but also swept liquidity. So this is the sponsored volume. I was hoping we would get back up into that region around 6.665. That would be nice. We just created liquidity here, and then we just continue to trickle, creating more liquidity. What's interesting about this region of price in here is that on the 1 hour time frame, there's a clear buy to sell. Now, many people will get confused by this. They'll think, oh, this is a sponsor candle. This is not a sponsor candle. This is going to trick a lot of people. I would not trade this. Sure, it could react and go short, but this doesn't meet my rules. Just because it's a clear buy to sell, engulfing, doesn't mean it's a sponsor candle. Yeah, we swept one wick of price action, one wick, but you can look at this candle here. We swept one wick of price action here, pushed down, created that buy to sell, but we never reacted. We went long. Not a valid sponsor candle. Not a valid sponsor candle. In the 15-minute time frame, we can see it actually created the trend line. 1, 2 touches. If we extended this trend line out, we had the third touch. Many people are shorting it. So what this tells me is we have the potential of pushing back up, because if people are shorting this trend line, well, we want to go run the liquidity, run the stop losses. So price may have that overall pullback. Now we're overall bearish, so this would not be a break of structure, right? You wouldn't want to pull back and go long from this. You would want to see this as an overall pullback in the market to take it short again, right? Lower low, lower high, lower low. That's what we would want to see. And if we just zoom out a little bit, we can see, I know it's blurry, but I'm just zoomed out. We can see this is the overall, see the markets are fractal, right? We can see the overall movement of the market. Lower low, lower high. We're looking for a lower low. Lower time frame, lower low, lower high, lower low, probably a lower high and a lower low to create this overall expansion, right? On the lower time frame, we could have, lower low, lower high like this, overall pullback continuation. So we can see how everything occurs on every single time frame. It's fractality. Markets are fractal. So there's no current setup here at the moment, nothing pertinent really. If we get a push up into that 6.665 level, I will be looking to take shorts. This is the most valid region of price at the moment, but we're still trickling, so we just have to be patient. AUD/NZD. So AUD/NZD is very interesting because we have been reacting off of demand levels for quite some time now. We are still counter trend bullish here. This was our higher time frame objective. So if we end up blitzing through these lows, closing below these lows, we will be not only higher time frame bearish, but lower time frame bearish as well. 1175, if you recall, was that level that we swept liquidity from 2018. That was 2018's high. We finally came back up into it and we had a massive reaction. So we are, we pulled back a 3 hour time frame. We can see that we came into our demand level, filled in balance, and we started to retrace. Well, now it's looking like we may just go short. I had an area of interest here, right? There was a 30-minute. Upon the reaction to the higher time frame level, we had an expansion. We created equal lows, liquidity. We had that sell to buy coming into our level. We bought it here. We create more equal lows, but we also create the demand level that created this demand level, right? So this demand was created after the sell to buy. So was this demand level. Sell to buy, we create this demand imbalance. So I thought, okay, well, higher high was formed. We formed equal highs here and equal highs here. Any pullback would definitely give me that conviction that we're going to go long, right? And we can even extend this over. We can see that's relatively equal as well. So we swept all this liquidity, sell. I'm hoping that we'll get a reaction to go long. Maybe have that 1 drive, 2 drive, 3 drive, sweep the liquidity here. to fill this imbalance. We're already in this level, but we're pushing strongly right now. Not to say that, we're going to lose. Our stops are below the low here. But if we do, it's just one of those things that happens. You lose trades, even when you have tons of confluence. So I am currently in drawdown on this trade. I'm not going to lie there. Hopefully we can get a reaction. We have tons of liquidity to take. 1, 2, 3 touches here. We have equal highs here, but you never know. Smart money is never 100%. It's very, very accurate, but it doesn't always work, just like any other strategy. You may build a million confluences, but still lose the trade. It just sometimes happens. So we're going to be patient here. If it hits stop, oh well. But if we do get a reaction, like a lower time frame, let's just call it 5 minute maybe a lower time frame accumulation here, sell to buy, something like that, then that will be good for an additional position. So we're still within this level. We could easily react. We'll just, be patient right now. GBP NZD, again, there's really nothing much to talk about because it's not pertinent. This is a great area of interest around 1.9421 or 1.942, that psych level. The reason for that is, I'm not going to go over this all in depth, but in a broad perspective here, we had liquidity. We ran the liquidity. On a lower time frame, this is a beautiful supply level. We create equal highs on a lower time frame. We ran it buy to sell, right? So lower time frame, we're running liquidity coming up into supply levels. We make a lower low again. We pushed up. We do not fill this imbalance. We do not fill it. We come like a half a pip from it, right? So this has not been hit yet. This imbalance between this wick and this wick has not been filled. This is also supply. So when we were making a lower low here, we were creating descending liquidity. 1, 2, 3, 4 touches. We made that lower low. We had the overall pullback. Then we started to create ascending liquidity here. So this does not mean that, we're making lower lows, lower highs. We should react off of like this. I mean, that's always a possibility. But remember, we have liquidity here and we have this unmitigated level of supply. So this would not be a break of structure as it may have seemed to many of you, right? Because we broke and closed above, this high here, this high, or this high, whatever. It's not a break of structure to the upside. We're still overall bearish until we close above this high here, right? Because this is the high that created this low. This is just an overall pullback in the market because we're overall bearish here. So once we swept that liquidity, we did it very, very quickly, very strongly. Buy to sell. We reacted off demand, but failed to make the higher high here. So now this flips to supply because we made that lower low. We generate liquidity. So if we get an overall pullback to snag liquidity, this would be that supply level in which I want to play off of to take it short. I want to take sell side liquidity, sell side here, and come into this region of price. So this is just a cycle level 1.9. This was the structure that we broke. We can see we're creating lower lows, lower highs. We finally broke, and this is what started the overall pullback. So we broke, closed above structure, pulled back, failed to make that lower low, and then we made the higher high. A lot of imbalance has been created here. So 1.9 would be my overall target. I will probably say, because technically we are higher time frame, like in a consolidation block, short term we're bearish. I would say if we come into 1.9 first, this is no longer valid. We would have to pull back first into this level before coming into 1.9 for this to be valid. So just be aware of that. That's GBP NZD. AUD CAD. So I am looking for overall shorts here because we can see we're overall bearish. Here on a lower time frame, we swept liquidity, kind of distributed, had our last buy to sell, lower low, pull back, lower high. We swept this high here, this high here, this high here. So probably this trend line retail's taking off of, right? 1, 2, 3 touches, they're selling, which is why we probably create a little selling volume. But then boom, taking their stops right back to the upside. This is not a break of structure again. This is just an overall pullback. Higher time frame, it's an expansion and a pullback. Lower time frame, yeah, it's a break of structure, but we should still be looking for shorts. We react off the most recent structure point, fill imbalance, fall, react off this demand, fail to make that higher high, and then roll over and make that lower low. So overall, when we see the overall pullback, this is the level in which we should be looking for shorts. And that's exactly what happened. So we came into this level and we pushed down. Now we are pushing back to the upside. So what would I be looking for? Well, I wouldn't really classify this as a break of structure because we didn't really close firmly below this swing point. We kind of just snagged the liquidity and started to pull back. However, I will be looking for shorts if this happens. If we get the imbalance fill here, we maintain our structure, we come into that supply, and then we break counter trend because we're forming this counter trend structure. And what do I mean by counter trend? Well, I don't mean just draw a trend line and when it breaks, sell it. I mean, when it firmly closes below the most recent swing point, then we can confirm shorts because, we reacted off the higher time frame level. We pulled back, failed to make a higher high, reacted off supply, filled imbalance, whatever, and then broke the counter trend here. High, low, high, low, high. Could be a 1 drive, pullback, 2 drive, pullback, 3 drive, A into B into C movement. That's what we could see. So I will only be selling this if we get that confirmation. Because as of right now, we're still maintaining bullish structure. Yes, we came into our higher time frame level, but this fast, sharp move to the downside was pretty much short-lived. We kind of just immediately started pulling back, and we're coming up into these highs. Technically, we're still overall bullish here. So I want to be looking for confirmations. So as of right now, we can look out for 90092, 9009, and then wait for a closure below this level. And once we get a closure below this most recent swing point after coming into this level, then we can confirm shorts and we can look for pullbacks to then short. But until then, in my opinion, I don't want to just be placing sell limits. It's not good enough for me. There's not enough confluence. I don't have that strong conviction yet. NZD-JPY. So we've been talking about this for quite some time. We had the major reaction. We can see higher high, higher low. We didn't form a higher high, but we created descending liquidity. We're overall bullish. Any pullback, we should be looking for longs. We stopped before this demand level. We can see the sell to buy, chop, 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 and then expansion. This is the most recent demand, and we did not come into it here. We created liquidity. We generated liquidity, equal lows, enticing buyers, right? Enticing sellers, push back down, sweep the liquidity, come into the higher time frame objective, and now we're starting to move. So I almost 100% guarantee you we're probably going to make a higher high. I'll say 99% because nothing's 100% in this market. But based upon the confluence, market structure, liquidity runs, law of effort, we're looking at pushing up, making that higher high. We have descending liquidity. That's our draw on liquidity, meaning that's what we're going to be looking to target next. So lower time frame, actually I'll go to the 4 hour first. We had that sell to buy into this level. We stop, we pull back, we kind of repriced ourselves, and then we continued. So this would be that area of interest I would be looking to take longs from. On AUD-JPY, which I'll go over in a little bit, we actually came into that level, but on NZD-JPY, we can see we did not. We actually formed equal lows prior to coming into this level. So that's why I have this level as still valid. I guess you can say when we broke, we kind of pulled back here, but I don't think this is really good enough for me. Higher high, higher low, higher high. We could, on a lower time frame, just sweep this liquidity, come into our most recent demand level and go long to maintain bullish structure. Or we could have that overall pullback. This would not be a break of structure. This would just be an overall pullback because we're bullish into our higher time frame level to take longs from. So in all reality, these two levels are valid for longs if we get the pullback. But you know how the yen works. The yen loves to just trickle like this. That's why I don't really trade it that often. So take pictures, screenshots, whatever you want to do. Mark off these levels, and we'll go from there. NZD Swiss franc. So just as we're looking to short AUD Swiss franc, USD Swiss franc, we can have that correlation there, and GBP Swiss franc. NZD Swiss franc, we're looking to sell off again. Higher time frame, even if we are to go long, we really ought to come into this level of interest. This is an unmitigated level of demand. We can see the 3-pin pattern doji formation. We still have imbalance in here, and we have all this liquidity here. Boom. Right? We're going to come and run that most likely. We're overall bearish. If we are to go long, we need to come into here, in my opinion. Right? So that means we still have room to go to the downside for shorts if we get the opportunity. If we go short overall, well, great. We're looking for shorts anyways. So lower time frame. Many people were thinking this is a break of structure. Well, in all reality, we didn't come into objective, which is why we're pushing back down lower. But this is a complete retail. If you're looking to buy here, this is sort of like that retail mindset. Look at how perfect this was. Look how perfect that trend line was. And when we broke it, so many people are probably looking to take it off that 61.8 retracement and go long. Everyone's trying to do that. But in all reality, this is just a liquidity run, a pullback into lower time frame imbalance and supply, now looking to go and attack sell side liquidity and the objective. So now we're starting to pull back. This is the directional bias we're going, so short. So let's go to a lower time frame. It happened to be on the 5 minute. We can see in here, liquidity run, buy to sell, liquidity run, buy to sell, liquidity, hopefully we get that run, buy to sell. 1 drive, pullback, 2 drive, pullback, 3 drive is what we're looking for. We zoom in here, 5 minute, we ran all that liquidity. We took all these highs here, whatever. And then we made a lower low, creating this tiny little area of supply. Now, I would not have placed a sell limit there. I broke this down in my daily market breakdown video the other day within VIP, and I said, I did not place a sell limit. This was all hindsight, but the fact that we reacted off of this level makes me think, okay, well, that's why we reacted off of it, because it was a supply level. So no one could have, in my opinion, really would have known that until it actually happened. So we see the reaction, we break the counter trend to the downside. So now we've made that lower low again. We've swept all of this liquidity. 1, 2, 3 touches. How many people do you think are selling in here? They see 1 touch, 2 touch. They're looking at that 3rd touch of the trend line. They're selling. We also have right in here, mini head and shoulders. Sell, entice the sellers below the neckline. Boom, right back to the upside. Break counter trend, take their stops, pull back. That could have been right here. That's this candle here. That could have been your entry. I didn't see that in time, but that could have been it. So we can see, as you're looking at these retail patterns, we know retail doesn't work. Retail doesn't move the market. Retail patterns don't move the market. We have to understand who's making the money and how they're doing it. The banks are making the money. The central banks are moving price. They're manipulating it. Where is the liquidity being generated? That's how you move the market. To fill orders, you have to have enough liquidity to do so. So you have to build liquidity prior to coming into levels to place your orders. Now, you don't need to build liquidity to place your measly little half a standard lot. These people are placing hundreds of thousands of standard lots. They need to be able to do that. And they can't get in without building liquidity. There's not going to be enough if there's not enough liquidity. But anyways, continuing, we had the reaction off the supply. We create the counter trend. Okay, we react, make that higher high, higher low, but fail to make a higher high in the sequence. From a pure market structure standpoint, we're bullish. Obviously, we knew, we probably would expect price not to make a higher high because we reacted off of, supply and really the last point of return. Last point of return meaning this is the last point in which price could come to before, breaking structure. And that's not what we wanted to see because we were bearish. Anyways, we reacted and then fell. So this becomes our supply. The demand is invalidated. This becomes our supply. So that's exactly where we want to be looking at pulling back. We stop, we generate more liquidity. 1, 2, 3 touches, almost that 4th touch. So much liquidity being generated. This is what I want to see. I just want to see that massive buy, take liquidity, fill that imbalance on a lower time frame. I'll just go out to a higher time frame so it's not blurry here. Right? Come into that level and then short off into our objective. So this is how we can be doing proper top-down analysis to get a high, high risk to reward, but also high win percentage. You can have best of both worlds if you know what you're doing, right? So now we're starting to push up. It is 8:30. So that's probably news. Probably creating that volatility. Let's say Wednesday the 10th. Yeah, USD news. So that's just going to create volatility throughout. So we're going to be seeing a lot of this volatility. But what news does, and I'm going to be creating a video on news next week. News is just an excuse to push price in the overall direction it was always meant to go. So we can see this push to the downside now that's occurring. I wouldn't be surprised if, since we swept sell side liquidity here, we push right back to the upside, take buy side liquidity, come into this level and short off. Okay. That's what news is going to be doing. Or this is the overall objective. We may just come into it just like we're seeing now. And if that's the case, then, we'll go from there. But that's how we can read this price action. NZD USD, well, I knew that based upon a higher time frame perspective, we're still bullish. So what I wanted to see was a reaction from this most recent area of supply. And we can see we just busted right through it. So I wanted to see the liquidity run. descending liquidity taken, buy to sell, break the counter trend, then pull back. That's exactly what I wanted to see, but we didn't get that. So now I'm sitting on my hands. I haven't been trading the US dollar all week because we're still bullish and there's really no setup unless we have a clear buy to sell, sweeping liquidity, coming into supply, falling, breaking counter trend. But right now, this is sort of just a liquidity run and I'm not going to really mess with it. So this is off the table. GBP Swiss franc. This is not really pertinent. We're overall bearish, lower low, lower high, lower low, lower high, lower low. Just want to see a lower high for maybe another lower low. We can see that in here, we had that buy to sell, creating the imbalance, sweeping that liquidity just by a few pips. And now we wanted to pull back up into our most recent structure point that when we broke counter trend, we never pulled back up into to fill imbalance. So 16644. If we get that maybe next week, I mean, this could take days or weeks, or it just may just completely just fall and this will become invalid later. But anyways, this is what I'll be looking for. Since we did make that lower low, I'll be looking for an overall pullback. That would be my area of interest, right? So many people would probably say, oh, well, we have structure here. Well, why not take it there? That's a possibility. We could react off lower time frame structure, but when price breaks, if it does, don't be concerned here. Understand that this is just an overall pullback, most likely, to continue short. So that's what we'll be looking for. But again, nothing pertinent on this. GBP CAD, really upset about GBP CAD. This is such a beautiful setup, and now it's moving away from it. But, oh well, we still could come back down. We accumulate higher time frame here. We can see the liquidity run. Sell to buy. We break the counter trend. Sweep liquidity. We actually come into a higher time frame level of demand way over to the left. So we accumulate, we break counter trend. So now we're bullish. We're bullish until we come up into objective. These are our objective points. This is just the structure. Lower low, lower high, lower low, lower high, lower low. These two regions of price are our supply levels, 1.58 pretty much to the T, and 1.59 pretty much to the T. So these psych levels are lining up with these supply levels. So I was hoping that, we would fake out of this head and shoulders and this trend line here, sell, entice the sellers, and buy right back up into our objectives. Because we have two levels of demand that have not been mitigated yet. This demand and this demand. This demand right here was not mitigated with these wicks. That's why I have two levels. But we can see that we're just pushing up now. So we'll just have to sit in our hands a moment. Euro CAD. What a beautiful trade this could have been. So Euro CAD, I've been talking about this for past few days now. I'm not going to get into all the details, but on a broad level, we swept equal lows, sell to buy. We generated more equal lows here. We took it by a few pips. We pushed up, had our last sell to buy. We broke the counter trend, making that higher high. We pull back into this level. We had the reaction from the market structure. And if we scale into the 2-minute time frame, we will see that we had accumulation, equal lows generated prior, sell to buy, equal lows generated again before the mitigation. We have the mitigation, imbalance fill as well, lower time frame. That would have been a beautiful trade to take. And then we had the buyout, right? So what I really wanted to see on the 15-minute is market structure to the upside just continue to maintain itself. Higher high, sweeping liquidity. We're generating more liquidity here prior to coming down into our level. We see we had the fake breakout of this high. We generate more liquidity, lower time frame. We finally come back down and sweep that liquidity coming into that sponsor candle on that 2-minute, and then we make the move. This is just the retest of this sell to buy institutionally sponsored move. So this is what I really wanted to see, that mitigation and that imbalance fill. And we can see we just swept that liquidity by like a pip or two, and then we made the move. So didn't come into my level, unfortunately. Really bummed about that, but oh well, we move on. Would have hit our take profit very swiftly. So no trade on that. Euro GBP. Oh, we just missed it. Anyways, I think we can still come higher on EG, to be honest. Higher time frame. We are bearish. Lower, well, not lower low, but we failed to make the higher high here, and then we made the lower low. Lower low, lower high, lower low. Our overall objective is 83279. This is our imbalance fill on the higher time frame. We haven't come down into it yet, and we can see all in here, this is a bearish trend. We finally became bullish after this liquidity run, break of counter trend structure, created more liquidity prior to coming in, filling the imbalance and retesting demand. We did that sell to buy, chop, 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 and then the expansion, and then we never look back. So I really want that imbalance fill before potentially going long again. If we go short, well, we're looking for shorts anyways. So lower time frame, for one thing, we have imbalance here, so really we ought to go short. 2, we have liquidity here. 3, liquidity here, and 4, objective. So shorts are really looking good. I have a few levels. So within this pullback, we can see these triple equal highs. Again, retail resistance. We go and take their stops, free up liquidity, come into this most recent level of supply, and then we have a strong move away from it, breaking the counter trend. Okay. So along this path here, we have multiple levels of supply we could react from. Just intermediate supply. We have a little bit of supply here, but we also have liquidity right in here and the imbalance between this wick and this wick, just straight selling volume. So we could push up into this level around 8,540 round figure. This also lines up perfectly with where we swept liquidity before, right? So that would be a really good confluence. So I really favor pushes up deeper into here, right? But we could see reactions from these two levels. So we'll just kind of play it by ear here. We just missed it, but I think we can have one more run. All right. Euro AUD. Oh, look at that. Look how perfect these mitigations can be, guys. This is just if you have to understand the levels and where the mitigations are, where the liquidity rests before looking to take a trade. So currently I'm up, well, from this trade, about 50 pips. I had a 2-minute time frame trade or 4-minute time frame trade here. I'll go over in a second. I'm up probably about a 1 to 4, 1 to 5 at this current price, about a 1 to 6 at the peak. Looking to target higher time frame 1.48199. So let's go over what this looks like. So currently higher time frame, we're bearish. We can just see that. Even a 5-year-old could say, where are we going? Short? Okay, cool, great. Well, where's our objective to potentially go short again? If we're looking for buys, since we're counter trend bullish here, right? We break the counter trend, close above it, pull back, fail to make the lower low higher high. Pull back again. We're making higher highs, higher lows, lower time frame. So lower time frame trend is bullish. Higher time frame trend is still bearish. So if we already go short again, where is that objective? Well, it's going to be right here. We can see that we have the massive buy to sell, clearing liquidity, creating this imbalance here with a strong move, and we did not come up and fill it, even with that wick right there. We did not fill that. So I still believe we are to go long. So lower time frame, very quickly, equal lows snagged, sell to buy, higher high, generate more liquidity, come back down, sweep that liquidity, come into demand, reaction again, maintain our structure, higher high, pull back into this imbalance, the sponsored move where we swept liquidity. So this is the sponsored candle. We come into it very beautifully. And on the 5-minute time frame, we create that reaction, reacting off the level, creating the demand, breaking the counter trend here. We did fill that imbalance. So that was the only thing that sort of worried me. We already filled it. So why would we be becoming shorter? Well, it's just because I had more conviction, had more confluence to take it long because of all the confluences I just described. So I was still looking to play off of this level, but I didn't buy it right there. You could have bought it probably right here off the last selling volume or in here. But I waited for a reaction. We generate liquidity, 1, 2, 3 touches. People were buying. Nope, sell off. Okay. So now in a lower time frame, I think it happened to be the 4-minute that looked the prettiest. We started to accumulate. Oops. Actually, I'll just go down to the 1 minute. We'll start to accumulate in price. There we go. Accumulation. We had our last push, and then we broke the counter trend. We failed to make the lower low, and then we made the higher high, clearing structure. So now we've accumulated into our region of price, maintaining our structure, breaking counter trend. Our entry would now be this demand level. We got the entry. We chopped around for a little while, but we finally made our move. Now, what's interesting about this level here is the fact that on the higher time frame, I'll just go 5-minute. We create relatively equal lows here. Our stops are right here, just for reference, below that low, okay? What we do is we fake out retail again. Look at all these highs. Look at that resistance. We fake them out, right? 1 in the morning, 2 in the morning, almost the start of London session. Could be that Asian range breakout. Nope, right back to the downside because people are trading the breakout, take their stops below these lows, sweep that liquidity, and then make the real move. Maintaining the structure, testing the accumulation again, and we did not hit our stop. So this becomes my new level of interest. We fake buyers, fake out sellers, take buyer stops, and then take seller stops. 15-minute, zoom out here. Oops, excuse me. 15-minute time frame, and that's exactly what happened. This was our level, sell to buy. I thought we were going to run all this liquidity, sell into this level, buy back up. News was just an excuse to do that. Okay, so we have another entry. I'm probably going to place, my stops. I'm going to move them from below this low to right below this low, just because if we come all the way back down and sweep that low, we may just create a lower low. So we'll have to see. And we can see on Euro NZD that we kind of are bearish again. Higher time frame, we're kind of just consolidating. We could easily come lower and sweep sell side liquidity because we are technically bearish. So I had an entry on Monday from 1.62. We pushed up, took some partials, moved stop to break even, came back down, hit me break even. Oh well, I didn't lose. I made a little bit, but not as much as I had hoped. Oh well. Still think that Euro AUD could push higher into this region of price, the sponsored move, and also the imbalance higher time frame, and potentially sweep, kind of this descending liquidity here. That is what I'm looking for. If you guys got in, great. If not, no worries. We're here to learn, right? CAD Swiss franc. We finally came into my level. Finally. So daily time frame. I was wanting these equal lows to be taken for so long now. Really since June, end of June this year. Daily time frame demand, daily time frame imbalance. We're pushing down into this level now. Higher time frame, bullish, higher high, higher low, higher high. Looking for that higher low into our higher time frame levels to then make a higher high. But short term, since we haven't taken this liquidity yet, I was looking for a continuation short. And if you're a part of VIP, you would know we had a sell from this level. It was a 6-minute time frame supply that swept liquidity, buy to sell, created that supply. We got in here, we fell, made the lower low, we pulled back up into most recent demand that was invalidated because higher high, higher low, higher high, higher low with this pullback, higher high, higher low. You wouldn't classify that as a higher high, but higher low. We reacted from this level here, but we failed to make a higher high because, well, we reacted off of here as expected. We busted through that, creating that lower lows. That would be that region of price we should pull back up into. Fell in balance on the lower time frame. We swept this most intermediate high here, pushed up, filled in balance, supply, and then fell. So on the 1 hour time frame, I was looking at something very similar to AUD Swiss franc with this buy to sell. I didn't get in because we never really took the low here. We kind of just immediately stopped and then pushed right back up. I really wanted a firm closure below this. That would have been great for a pullback to short. So I personally did not get in this trade, but if you did, then you would be in a really good deal of profit right now. So now any sells, in my opinion, are currently off the table because I want to see reactions from our higher time frame objectives now. So I want to be kind of shifting to potentially looking for longs here. But this may take a while because we need to wait for price action first. It may take some time for us to, really develop some sort of, buy to sell, sell to buy, sweep liquidity. I don't know. It just may take time to develop a setup. So we're just going to sit in our hands. AUD JPY. Last pair, guys, and then I'm done. I'll take some questions. Higher time frame, just like NZD JPY. We're bullish. Higher high, higher low. Higher high, looking for the overall higher low. Just because we made this low and we failed to make a higher high and we made a lower low doesn't mean that we're bearish now. Where's the overall trend? Come on, it's bullish, right? Just because we failed to make a higher high and we didn't make a lower low doesn't mean we're bearish now. We haven't come into overall objective. This is just an expansion and an overall pullback for another expansion. That's really what it is. So lower time frame, we've come into that level. We swept liquidity, sell to buy, strong reaction from it. Okay. So very similar to NZD JPY, we swept liquidity, coming into objective, sell to buy, reprice, continue. We reacted off the level. So that's our secondary position. Now I'm looking for a third position here. So that's sell to buy. We come into that level, accumulate a little bit, and then expand again. So 15-minute time frame, I'm really looking for liquidity to be run, and that's looking like we're doing that now. And then come down into our 15-minute level of demand here, filling up some imbalance. So around that 93000 level, that would be good for that psych level entry. If we break, I will be still looking for longs in here because this is still in balance. And because of this is the higher time frame reaction, I don't expect us to come and make a lower low. I just don't. If it does, well, oh well, we move on. But so much confluence is pointing to the upside here. So even if we do break, I'll still be looking for buys in here, but I still have strong conviction of that level. So 93, I'll just give you. Ultimate target, taking out these relatively equal highs, that would be your descending liquidity, making that higher high overall, taking out this high. So probably around that 99, 100 level, psych level. That could be good. If we just pull a fib, I don't use fib extensions that often, but if I'm unsure, you take it off of a -27, -61. It kind of lines up with our region of price here, around 100. So that is what I have for you guys today. I'm not sure if Aiden has anything that I maybe missed. I'll add him back to the stream and we can take some questions.
No, I think you pretty much touched everything. Just waiting on some of the volatility to kind of settle with some of these majors. Got EU trading up into higher time frame levels we've been talking about. I talked about on Smart Money Sundays. If you don't follow that series on our YouTube channel, make sure you do. Every single Sunday, I make a video breaking down everything I'm looking at for the week ahead. But yeah, I guess we can field some questions.
Mm-hmm. Definitely.
Someone was asking about AUD CHF. I think Nate was one of the first pairs that Nate covered.
Yep. Yeah, I can just quickly go over that because I want to go over our AUD NZD. So this is why it's so important, guys, to have multiple take profits, right? I had a take profit set right here at 1.113, round figure right above these two equal highs. If you didn't see this and you wanted to manually take profit or take partials, you wouldn't have been able to do that here, okay? Because the news spiked right back down. So what was the news's objective? It wasn't just to create volatility and be annoying. It was to sweep liquidity, right? That was the objective it was always meant to do. So break even, I did get hit out break even, had the beautiful entry, just as discussed right before this happened, took partial, so I did make quite a bit of money, but now we push right back down, hit me break even. Oh well. But this is why we need to be setting multiple TPs, because you never know when this stuff is going to happen. Set multiple take profit. Take profit should be set at levels in which price could potentially reverse. In this case, price could potentially reverse after sweeping the highs. Price could potentially reverse maybe, somewhere up here in supply that could react and, fail to make the higher high and make a lower low because we reacted off the higher time frame structure, or higher time frame liquidity to the left. So this is the stuff that really separates, amateur traders from more seasoned traders. It's not just about finding the entry or understanding the strategy. It's about the tiny little details as well that, creates more profitability. So even though I didn't lose the trade, I got hit out break even, unfortunately, but still made quite a bit of money there. AUD Swiss franc, I still like this level. I do. We're sweeping liquidity now. We're overall bearish. We've made that lower low, right? Now I want the lower high. I will be looking for trades in and around this region of price. Remember, 6665. If you're going to trade this, be careful. Use risk management. Stops would go above the high here, 668. Looking for a lower low because, again, fractility says, hey, look, expansion, pullback, expansion, expansion, pullback, expansion, pullback, expansion for this expansion, right? So that's what we're looking for. Let's see. What else do we have, guys? Any questions? Sorry, I haven't been able to look at the chat as of late. NZD Chef doing what I said. Oh, I didn't even look at NZD Chef yet. Yep. Wow, we pushed into that level. Cool. NZD Chef from 6020. All right, I'll quickly share again. Now, this is something we have to pay attention to. Okay. So we swept liquidity, just like we said, right? We came into this level. Now we're having the reaction. If we get some sort of firm closure, it doesn't have to be an engulfing, but if we get a strong closure, some bearish engulfing candle, well, not engulfing, but strong candle, I'll probably end up putting stops here instead of here. I'll move it from that high to that high just to kind of cover me a little bit. But right now I'm letting it breathe. We could chop around, I don't know, do something like that and then go.
That spike created relative equal lows there, Nate.
Yep, right in here. We can see generation of liquidity. That's even a word. Sorry, it may not be. We generate liquidity here.
Engineering, yeah.
Engineer, yep. Equal lows, boom. That will be the target coming into our objective, right? So guys, we don't need a ton of trades at the end of the day. We don't. We need high risk to reward, high probable trades. For instance, if you took this trade, let's just say you put stop where I put stop, okay? 11 pips. Pushing back down, I actually have take profit at 595. It's that whole round figure. And it's the sweep of this sell side liquidity just before this level. This would be a 1 to 6. It almost passes your funding challenge if you did on that trade. If you had it right above that high, this supply is, it's a 1 to 13. So I'm not saying we're going to win this trade, but it's gives a good risk to reward there. I think I had a question. Was there a question on? Oh, boom. See, AUD cat, just like I said before, remember, because we didn't have that firm break below this level, even though we came into the objective, I wanted to wait for the imbalance fill, that 1, 2, 3 drive in the reaction. We didn't get that, so there's no trade. So we push back up, trade, we move on. All right. So just simple stuff like that will really help your profitability and prevent you from losing so many trades. Let's see what else we have, guys. We have 97 people on. Pretty good, pretty good. It's almost 9 a.m. Eastern. I'll take a few more questions and I'll hop off, guys. If it's all I have in terms of analysis. If you have questions, I'll stay on. If you have questions about any particular pairs you're looking at, I'll kind of go over those. But yeah, guys, it's so important that, one, you use good risk management. You know your levels. You know where you have your objective, meaning where price is headed. And then you just confirm it with the lower time frame confirmations with the concepts that we teach. It's really not that difficult when you get the hang of it. It does take experience and practice, but it's so rewarding when you do, because not only will your win percentage increase, but your risk to reward will as well. So, if you want to learn more about it, definitely check out our YouTube. We have a lot of free videos, a lot of good value there. It's all free. I just posted something else yesterday. So check out the newest video, show some love. But if you really want that more in-depth understanding and want to do this as a full-time career potentially, and you want to develop these skills even further, head over to our website, arielfxtrading.com, and just book a free call with us. We'd love to talk to you about how we can potentially help you. We're not able to help everyone. We want to, we look for specific criteria in people. Not all the time is it the best fit for us. Right? We need to make sure we're working with the right people, because if we are, then it's going to be a lot easier working together to help you reach your goals. And that's really what we want to see. So I had a question on an imbalance fill on gold. Sure. What's your question? I don't really trade gold, so I can't really help you too much there, but I'll try. It's about imbalance. See, GBP USD. I think someone had a question about that. Ooh, yeah, GU absolutely took off. So let me go over GBP USD really fast. Share screen. Go. Okay, perfect. So with GU, don't mind this level. This is where I bought it, but we can see here, overall, we're still bullish. Counter trend. We've broken the counter trend structure ever since we're pushing up higher. Overall objective, 1.243, 1.246, higher time frame supply and imbalance. So we haven't hit that objective yet. We're looking at running buy side liquidity. Well, so simple, guys. Look, head and shoulders, retail, retail, retail. Gosh, I can't believe people still trade retail. Sellers come into the market because they're trading the neckline, and then they lose again. It's just funny because when people continue to do this after I keep telling them not to, I don't feel bad when you lose trades like this. You need to be understanding who's moving the market and why you're losing if you're trading retail. It's because they are attacking your stop loss. That's what they're doing. So sweep of liquidity, sell to buy. We come down and we sweep this lower time frame liquidity coming into this lower time frame demand, have the reaction, and then we just continue long, right? We have descending liquidity. We have all this buy side liquidity to take, right? We had liquidity run from yesterday, sell to buy, pull back, and then we continue. All right.
We have a higher time frame objective that we've been talking about for a long time.
Yeah.
4-hour time frame. There you go. You have it marked up already.
And guys, be sure to tune into these live sessions every Wednesday and Sunday. Wednesday, 8 a.m. Eastern, Sunday at 2 p.m. Eastern time. And watch these daily market breakdown videos that we make if you're in VIP. Watch these morning analysis videos that we make if you're in VIP. Watch these Smart Money Sundays videos, even if you're not in VIP and you're just if you're not a part of our group, that's okay. Watch these daily market videos, or excuse me, Smart Money Sundays. They're completely free. We give out all these levels. So we're not just saying, oh, we've been talking about this for some time and lying. No, go back and look at those videos. We have been talking about all these levels for quite some time now. Even AUD JPY, even before we had the reaction when we were trading up here, I still said we need to come down into demand and go long. This would just be a sweep of liquidity. Same thing with NJ, same thing with pretty much all of these levels. So even if you are not a part of our group, and that's sometimes we're not always the best fit for you, but you can still watch these videos and our YouTube videos, still getting so much value, and you could be winning trades and learning this strategy, day in and day out, just by following the analysis that we post.
It's repetition.
Yeah. But if you want to take it a step further, we'd always love to potentially look at working with you and really help you reach those skills. We develop personalized plans for each of our clients to help them reach their ultimate goals. Most of that time, it's fully funded within 6 to 12 months. And that is our ultimate goal with our clients. And that's something that you should all strive for, because treating trading as just a hobby, it's not going to really do you much. You really need to treat it as a business or a career. You got to be serious about it. But let's see.
I want to drop since I can't comment, do you want to drop the YouTube and
sure, yeah. Check out our YouTube, guys. All free videos here.
So
actually, I have the link to it. If you just search Ariel Fx on YouTube, it comes right up. But I'll type in our website. You can check it out, see what we're about. There you go. Sorry, guys. I don't trade NASDAQ. I don't trade indices. I don't trade commodities. I don't trade cryptos. I don't trade stocks. I only do Forex.
Everyone loves NASDAQ.
I think it's because of the volatility, guys. You don't need volatility to be successful. You don't need for, a pair to pump pips in order to make money. You can easily pump pips or make money with stuff like AUD NZD that chops around, that has the lowest average daily range across the board. I mean, we took about 4 or 5 trades over the past few weeks, probably hitting close to like 20% return on them.
Yeah, I mean, just find what works for you, right? It's different for everyone. We all have different personalities. For us, it's strictly Forex pairs. For you, it might be US 30 or crypto, but it's not to say one is better. It's just a matter of personal preference.
Mm-hmm. Sorry, Alan, what pair are you talking about? I see your question. I'm not ignoring you, I promise. What pair are you talking about? I'll happy to answer that question. Need advice in Forex when dealing with consistent losses. It all comes down to risk management, psychology. Watch our free psychology video on YouTube. That will probably help you. But it also really comes down to just experience. You're gonna lose trades. That's just a part of trading. But it also comes down to developing the right strategy and working on perfecting what you're being taught or what you learn through a trading plan. A mentor that will definitely help you. But losses are, they do happen. I go on losing streaks sometimes. I try to limit that, but it does happen on occasion. But you just need to understand that if you have a strategy that works, especially like ours, then you don't need to worry about losses, because they will come, because the strategy works. You just got to stick to your plan.
Experience is definitely your greatest teacher. So, stick with it. I don't know how long you've been trading, but you've got to go through the ringer in order to be successful. It's not going to happen overnight. You're going to fail, over and over and over again. But you have to take that and learn from it, and not get down on yourself. So we all go through it. It makes you better at the end of the day.
Definitely. It took me close to 18 months to be successful and profitable with smart money. Been trading for over 5 years. I've been consistent for about 3.5. So it does take time. It's a process, but it's definitely better than being stuck in a job for 40 years of your life. That's many people. I'm not down on a job. I'm really not. If you love your job, by all means, like, congrats. Like, that's awesome. Just find your happiness. But for me, I just don't want to be stuck working in an office or working for someone. I'd rather, have that financial freedom, have that time freedom to do what I want. That's just who I am. May not be who you are, and that's completely fine. But if it is, then, definitely work towards that. Have that goal. Forex could definitely get you there, but it is a process. It does take time. But I'm telling you, it's very rewarding when you don't quit. All right, guys, any last questions before I go?
Let's see. Most of your trades from Sunday were wins. Yep.
Beautiful, beautiful.
And that's just experience, guys. It's what it can do for you. We don't have any magic crystal ball. It's just intuition from experience and from failing over and over and over again and losing a lot of money in the process. So you can, we were no different than a lot of you who maybe are struggling right now.
And if you are struggling, like, it's normal. Like, it happens. It's not anything that you may be doing wrong per se, but it's just the natural comes natural with anything good, especially trading.
Yep.
So yeah, I had a question about news. If the news was good, then it would have been. It went the other way. I would like to go back and look at all the outcomes of the news. It always went in the direction of the news. So many questions. I guess I'm not quite clear on your question, if there is one. All I have to say about news is that even if news busts right through your level, then it wasn't a valid level, because news will always go in the direction it was always meant to. It would always go to mitigate a level, to fill an imbalance, to hit an objective, hit something, right?
It's just an excuse to inject volatility into the market.
Yes.
It's a volatility injection to catalyze, to be the catalyst for price, to push it in that, predetermined direction. It's already determined where exactly it's going before news comes out.
Yep.
Let's see, anything else?
All right, any last questions, guys, before we head out?
If not, we're back Sunday live. Smart Money Sundays as well. Let's see. Should we close all of our trades then to be safe? Not necessarily. I mean, I guess it kind of depends on where you're at in your trade. But if you're in significant profit already, then you should probably be break even. But at the end of the day, you have to trust your analysis and trust that the news is just going to push it in the direction that your analysis told you it was going to go, right? So,
and if it ends up hitting your stop, then the original level that you traded from is probably not the right level.
Exactly. So don't close out of fear that, just because the news is going to create volatility, that's not the way to approach it. Close if you think the setup is no longer valid.
All righty, guys. Well, thank you guys for tuning in. I appreciate the time today. As always, much love to you all for, hopping on. A lot of familiar faces here. And really quickly, tune in Sunday, 2 p.m. Eastern time for our weekly analysis live session. We'll be going over quite a bit of pairs to prepare you for the upcoming week. And if you're really serious about taking your trading to the next level and really becoming funded and doing this as a career and really developing the skills that you can have, head over to our website. We'd love to talk with you. We may not even be the right fit. If we are, great. We will extend an offer for you to come and work with us. But if not, then you at least know that. So, we'd love to help you develop these skills and work with you going forward to get you to where you want to be. So thank you guys so much. Have a great rest of your day.
Thank you.
Talk to you all later. Take care now.
Take care, everyone.